Good morning, traders. Please like my video if you get a chance on YouTube. Comments below are appreciated. And, retweet me on X if you get a chance. Gumby9662C. Okay, guys. Uh, so basically, some things I'm going to start. It's all about bonds, bonds, bonds. Okay, guys. And it's very important to realize just how dangerous of a situation we've got setting up here. Uh, so basically, a few weeks ago, I had a title of a video right after the announcement of Liberation Day. We had our first auction that very day. I had this video that morning. We had an auction happening after the big announcement of the tariffs and stuff. And I had mentioned buyer strike, possibly international buyer strike happening in the bond market, and that has continued to play out. Uh, we've had three major auctions since the announcement of Liberation Day. Had another 20-year yesterday. Horrible auction, horrible auction. And in addition to that, we've had we've had all three rating agencies downgrade us from AAA status on the bond markets. And actually, this downgrade by Moody's is actually, in my opinion, worse than the other two, because now there are a lot of funds that require in the bylaws so a percentage of their fund has to be invested in AAA uh, securities. Well, guess what? There aren't any left. So they're having to rewrite their bylaws just to buy U.S. Treasuries. And so that's actually adding fuel to the fire because they have to get these bylaws all rewritten. They have to go through the board. They have to be all approved and stuff. So we're into this, what typically would be some funds buying into the U.S. Treasuries. They're not even allowed to do so until they get their bylaws all fixed. Uh, so that's an additional fuel to the fire here. So I wanted to start with this chart right here to show you just how important of a potential breakout scenario we've got going on here in these bond markets. And I have said this for some time that the bond markets have been the yields on these long dated treasuries are way, way artificially too low. And part of the reason for these being artificially deflated has been the magical invention of the Fed's balance sheet. So basically, what that is a slack vehicle. Anybody knows just-in-time inventory? They know slack vehicles are, just a buffer inventory just to keep the system running, and you just want to have the minimum buffer you possibly can to keep the system going. Well, the Fed's balance sheet, what they do is the government has an auction. They don't need all the money today. So they put it on the balance sheet and then they try to sell that buffer into the global market and and absorb that at the lowest possible yield possible. Okay. Well, that has been working great since 2007. That's when it was invented after the great financial crisis. That has been working great. But now the international community says, hey, if we're going to be renegotiating these tariffs and everything, heck, we're not going to mess with your U.S. Treasuries. We're going to buy just enough to, uh, keep people to say that we're actually participating, but we are not going to buy anything. And now with the new budget that they're proposing, the Republicans are proposing. And guys, don't get me wrong, I claim to be a Republican myself, but this budget is horrible, horrible, absolute horrible in the current situation. And uh, so I will see how it plays out. But I do not like what they're doing. They got the corporate lawyers uh, redefining the idea what tips are actually what are tips to so basically corporate bonuses now all of a sudden are going to fall under tips and they don't have to pay any taxes on corporate bonuses because they're going to be considered tips type things, and that's just one of the aspects I don't like about and then people love the idea, oh, we're not going to have any taxes in overtime. Well, it when you have your society working a lot of overtime, that creates a whole nother a gambit of problems in society where parents are never home to raise their kids anymore, and we go back to the MTV video games, MTV raising the kids uh, kids are sitting in front of the TV all day and nobody's home taking care of the kids. And, so it creates a whole nother slew of problems in society by, encouraging people to work more and more overtime and not spending time in the family unit. So, there's a lot of little things here I don't really like about that. And there was one other thing here. One second here. Yeah, the final thing I was wanting to talk about, Trump and his policy of uh, no taxes on tips. That convolutes what the Department of Justice follows to track illicit uh, uh, practices in society by following the Treasury's trying to follow people who are doing illegal activities, you know, uh, and avoiding the IRS and stuff like that. When all of a sudden you're making tips, now all of a sudden all this money coming into the bank statements, it's not nearly as clear as it's fraudulent activity or illegal activity. It's really convoluting for the Department of Justice, and Department of Justice does not want to have the whole tip thing. They've already made a report about it, but they're burying the headline on that. Okay, just a few things to think about going forward here. Yeah, some of the problems that this bill is not is it's just not good, guys. Okay, guys. So this gives you some idea on the 30-year. We're about to break out of this, and this real strong consolidation. See how we consolidated so tight into this range? This really looks like this is all the earmarks of a breakout. And guys, we start breaking out above this level right here. The markets are not going to like this, guys. They're just not going to. So be very mindful of that. So far this morning, we got um, a bid under the main indices this morning, and I did want to point that out. So I didn't want to be telling everybody to go. Let me get my volumes here sorted right. That you should be going short the markets right out of the gate this morning. Okay, guys. Obviously, ZNs, the bond markets are very hot this morning. So be very mindful of that. That's where all the volume is hitting because of that big sell off yesterday after that auction. We had a horrible 20-year auction yesterday, but we do have a little bit of bid in the bonds early on this morning. But I tell you, it's right there. It's ready to break out. So, and it really looks like it's going to happen. So, um, I do want to point out right here, guys, right here, right now, and you can see on the RSP, this is your equal S&P 500. Technically, this is by the dip. So basically, we broke out above this critical level here. This is a critical level, okay? And, this is doing a back test as we speak. So technically, guys, you should be buying the dip uh, coming in today's session based on the RSP. So I just want to mention that, going forward here. So be very mindful of that. We are into a major put wall as well on the S&Ps. Okay, so if you put SPX up, see if that shows up here. Trade. 1 second here. Let me hit this pause real quick. There we go. Go on to 0 DTEs, open interest. There you go. This 5850 is a big deal here, guys. 5850. So let's keep a really close eye on that. This 5850 is a very major deal going into the rest of this week. Okay, guys. If you go out on the weekly as well, just give you some context. The 5850 on the weekly. Uh, so this 5850 is really, see this right here, right there on the weekly. That was a major support, a breakout support area right there, 5864. Okay, below that, that could open the door to the downside. So be very mindful of that on the weekly time frame here. Right now we're inside. We had a really big candle last week, so we're still inside of that. But we do not want to see prices uh, accepting. We do not want to see a lot of price acceptance below this area right here right now, which I don't think they will. but you never know. I mean, um, so be very mindful of that going forward here. Very, very important area right there that we are back testing early on this morning. Okay, guys. And guys, if you are a bull, like I said on the RSP, if you are a bull, a breakout above an area and back testing it, that's what you're looking for to be going for a continuation pattern. This thing went up, broke out, we did the back test. We would be looking for the continuation. If you're a bull, you're looking for the continuation to go higher, and all we got was the back test. So be very mindful of that for you bulls out there. If you were bullish, 3 days ago, you should still be more bullish, today, after getting this back test. So just heads up on that. Okay. Hughes, we didn't even quite even make it into that full-on back test area yesterday. Okay, and we're already bouncing before we actually got down into that critical support. So the critical support is around the 511 area, which we didn't get down to that. So that's another thing, another takeaway to think about going forward here. IWM, I've been shorting IWM. Very, very major 4-year resistance here. We're breaking down away from that. They do not like higher interest rates in the Russells. Many of these companies do not make money. Higher interest rates just devastating for these companies in the Russell, and we just got a massive breakdown on that Russell as of yesterday. Um, so we still have a valid inverted head and shoulders. We could actually come all the way down to the 197 area, and still this could still be a valid inverted head and shoulders. So as long as we don't break that neckline down here, you have to be mindful here. Keep things in context, going forward. This, like I said, this could be an inverted head and shoulders, but this is not looking good for the Russell. So be very mindful of that going forward. Okay. Okay, some things happening today, guys. We're not into any type of major support here on SMH. That's not really a major back test area, in my opinion. So just be very mindful of that going forward here. It's kind of a lot of noise in this area on the SMH. So be very careful of that. The highest volumes this morning is your SOX. So that's your bullish 3-time ETF. Okay. And catching a little bit of bid early on this morning. So we have to be mindful of that. NVIDIA is in play this morning. So basically we have a breakout. This is critical support right here. Back testing right here. Okay, guys. We came right down to the channel, back tested it. If you're a bullish on NVIDIA, this is a bullish continuation pattern until proven otherwise. So guys, this was a very critical back test. A lot of traders probably went long into the close there yesterday, thinking that this thing would bounce, and that's what we're getting this morning, a bounce on NVIDIA. So be very mindful of that going forward here. Boy, you don't see TLT taking a seeing morning volume like this very often. So this is a potential buy zone. That doesn't mean we're even at a bounce point yet. So, we can go all the way down to the 82.70. That'd still be a valid bounce point on the monthly. So be very mindful of that. Marathon is bouncing. So the cryptos do have a little bit of bid this morning. Get a little bit of bounce here on that. Just an ugly chart. See all this chop right through here. It just and you got this prior high here. What is it at? 1650. We seem to be poking above this prior high this morning. So be very mindful of that. I don't really like the pattern on that. Palantir, the apartment Doge. Supposedly, Mount Palantir is doing very well with the whole Doge movement going on here. 122 this morning. You got to get above 125.50 for the breakout continuation. So a lot of noise this morning. BITO, I don't watch BITO that much. We're into what potentially is a high here. So be mindful of that. Don't really like that one. China's taking it on the hand a little bit down this morning. SMCI, that's one of your semiconductors. It's up a little bit. I'm not really fond of that. A lot of people have been talking bullish Google because it's one of the last of the megatechs to recover here. We have an inverted head and shoulders happening. Inverted head and shoulders. That's an ugly inverted head and shoulders, but it is one. Okay. Right into the 168, 170.52. 170.52. So, guys, heads up right that. This right here is a prior high. We could be actually breaking out of this prior high area here today on Google. Something top watches today. A potential upside move on this potential breakout here on Google. That's when I put my market webs on here to double check the potential breakout. One very important thing here, this is not a monthly high. The monthly high is over here. So the odds that of breaking out actually improve by not being a monthly high already. So be very mindful of that going forward here. This is not a bad little pattern for a breakout to go back up here into the 175 area. So definitely something to keep on watch. So guys, we have an all-time high breakout on snow this morning. Heads up on it. Snowflake, all-time high earnings breakout this morning. Heads up on that. It's not something that I would want to short. Absolutely not something I'd want to short. Heads up on that. That's probably going well over $200, 210, 220 possibly, setting up in today's session. That thing is not something you want to short. Very light volume move, so be very mindful of that. Only 110,000 contracts for this move, so always be careful when you see those low volume breakouts. That could be a problem, so we have to be mindful of that going forward here. Okay. Apple, light volume on Apple this morning. If you use your Ichimoku, I think it's really important to notice how this is just continuing to break down. 1 second here. So I thought it was really important here. This was a bearish pattern. We came up, we tried to break above the cloud, we failed. Now we're back inside the bearish cloud. Heads up on that. This is a really bearish pattern. Our main support's down here. It looks like we're going to be revisiting down here at the 197 area. I do not even want. I honestly, guys, I wouldn't even mess with it unless we get back down to 197. So be very mindful of that going forward here. Another one, definitely keep on watch here. Amazon is a major back test. So we came right down yesterday, hit that back test area. We do have a slight bid into it this morning. It looks like we're failing the cloud. This is really starting to look like a bearish pattern, but we have not broke support yet. We have to keep a very close eye on this going forward here. Remove that one. We don't need it anymore. But my point is, I would think there is a decent odds this thing is going to fail this pattern. So be very mindful of that. But like I said, we came up. This is a critical backtest area. So a lot of times, for you bulls out there, this is the area you want to be starting to sniff around for this support to hold. So be very mindful of that. Okay. Microsoft still looks like a back test. So heads up on that. We came down doing a back test for a potential move back to these all-time highs. So be very mindful of that. It's still a bullish pattern until it's not. So be very careful on that. It's very expensive. The MACD looks like it's rolling over. Just some heads up on that. We do have a breakout in play going on in our crypto area, Bitcoin especially. And I would be getting quite suspect on this Meta breakout failing. So we did do one back test already. We're doing the second back test of this critical breakout area. Technically, we haven't broke, so it could still very well be a bullish continuation pattern. But I would definitely want to keep a close eye on that to see if we see some weakness. I'd be a little bit worried because we got the second back test. I typically don't buy the second back test. The first back test I'll do, but not the second. So that gets me a little bit worried about the continuation of this pattern. So, guys, the narrative's been American exceptionalism, and Trump going on and on and on about this American exceptionalism. Well, yeah, the economy looks exceptional when Biden spends $2 trillion a year on deficits, and now under the Trump new budget, those deficits are actually going to increase. Uh, that's it just doesn't make any sense to me. If you can have American exceptionalism and have a budget surplus, well, yeah, that's something to brag about. I don't I don't particularly want to be bragging about just keep printing more and more debt and it's going to be so great for the American economy. It just yeah, no. You're getting less and less diminishing returns on all the debt we continue to print. I think we're getting less than a quarter for every dollar the government spends. We're getting about a quarter return on every dollar of spending. We're back in the 70s. If you spent a dollar, you would get 10, 20 times the relative return uh, for the economy. Okay, because there's so much debt out there, we're just not getting bang for the buck for all the spending we're doing. So just some things to think about here going forward. Uh, but yeah, I'd be really careful. The markets are not giving us in my opinion, a sell signal yet. If anything, you're probably going to buy the dippers coming in today's session. So be very mindful of that. Thanks a lot, and I will see you later this week.